11/19/2011, 11:10 a.m. Pacific Standard Time, Saturday MMT training. MMTs in the first video we did the 11/25s. We are now going to move to the 12/17 only call and put strategies. What I would like to show you in here is on the put side of the 12/17. We'll take a look at below the market. They didn't do too much with the 580 calls and the puts. You can see here that under the net change here that they took that much. They took 13% out on the 590 calls is what we're really looking at. They really took out of the call. You can see the prices, the change from the open, 19%. You can see that the 590 call, which is in there twice, that's what they lost in value. The upper end of the market here is a $600 call that lost 27% of the value of the 600. The $605 call lost 27%. The $610 call lost 30%. And this is the last print item. The 620 call lost 36%. And the low was $7, and here's the high column of each one of them. So basically, for the calendar is the $650 call, which we're buying on the dips. It's the same call that we sold at $1.90 or $5.90. Down 48% premium. We sold at the high. We're buying some down at the low on that. That's the 12/17. One of the things that we would like to point out now, that on the put side, they didn't add a lot of premium. When you get into 12/17, that's below the market. But take a look at the 595 put for 12/17. Net change minus 1.13, but here's the low and the high. Another one is at 600. Look at the ratio. It's about a little over $5 here. But look at their premium for a $600 put. They're not they gave it 5.76%. The thing that I would like to show is that 605 put. The 605 put had a range of $18 to $23. So we're definitely going to be looking at the premium structure, because this is only a $6 and some penny spread here on but the net change is look at here for this put, it's plus 7.59%. So we got up to 610 put, starting over here at these puts at 590. Put option right here, you can see the premium here, and so we're going to be focusing on all of these. We're featuring a $600 call. We're featuring that the call price was on the high $14.50, and the current Friday closing low on 11/18 here is $5.30. Now you can take a look the kind of premium that they've taken out to that one deflated area. And this is a 12/17. It's a monthly. Now on the flip side, that put option here is in the money, because Google closes at 594. This is where Google closed, 594. All right. So the $600 call is out of the money. Okay, and it's deflated. And the $600 put, well, we know that the $600 put is in the money. The low was 440. And the high was 11/16 on, that's the wrong one. That should be a December. I'm sorry. We have a November that should be replaced with a $600 call. And I apologize. I thought there was something wrong. But the same scenario is that I wanted to show the $600 call on this monthly level, and what the November looks like versus the December one. You can see the difference between a weekly, and you can see the difference between a monthly. Both same strike price now. And we already covered this section in the other video. However, you can clearly see that the calls were up here at $30 and they're down here at lows. Now, if you take a look at in the money put for December, in the money put, the 600, that's what it's going to look like for December. And you can see that the puts had made their lows in December at 1061, and that they're different than the weekly. I just gave you a primary example just to refresh your memory in this new video for us to make transactions. Now, we find out between inflated and deflated that at one time that put option was up here at 120, but that's way back, not that far ago, 10/4/2011. When the stock market had its big rally, these puts went way down, and they got down here to a low of 1061 on 11/16. Now, notice that the high was 20.79, and the December contracts run a little bit different. On the other flip side, MMT, look at this, 29.70, and the current call price low has been marked down to 15.10. They can go lower. If Google doesn't hold support level and run back towards 600, these calls can come at lower prices, and we'll do some of the pricing structure on these calls and where their values are. They can still get wholesale, and these can still continue to go up in value. They were $40 over here. You can see where some of the price is, $27, and you can see the bottom of this put side. The put side still has room to move as well. And we look for the dollar ratio imbalances with a put and a call, or a call and a put. It doesn't matter. So we'll be looking at valuations on the December contracts, on the 600s. Okay, I will go to the one that we will be monitoring for that very same period. Is what does the 590 call look like up here versus its counterpartner is a 590 put below here. Now notice that the 590 put chart here is that they had highs over here, way up here at 100 and some dollars, and you can see where these puts were at one time. Now the weekly stock trend is awfully strong, so once again this is a 590 call that is actually $4 in the money. What we're taking a look at is where that premium had really come down to this price level after 3 days. My goodness sakes, the last monthly expiration, which was just this last week, the high on these were $36, and the low right now is $20. So you've got a pretty good area that on that 590 call, if Google was to drop down and test support lower levels, then this call could come down at lower levels, and we will continue to do what the, so we have lower levels that can happen, and we can still have higher levels here that could go up. It will all be dependent on how Google trades off of support and then runs back up in its strong weekly trend. The other thing that I would like to show people for this contract is this $610 call that we sold up here at the highs. It's now the 610 call is the one that I'm looking at, and I'm also going to show you the 610 put that's deep in the money as well. That's this one. And once again, you can see where the bottoms were. You can see where these put options were at one time as far as your December contracts go. So once again, let's go up here where the high was of 23.30 on that call, up and out of the money, 610. The current low, so take 23.30 and take the current low at 10.60 right now. And yes, they can go lower, But on that in the money put, now that's out of the money call and in the money 610 put. Well, the low of that put right here. They put that low in at $13.90 and the current high on Friday was $26. So they've made a move. They can go higher if Google sells off to lower support levels. Naturally, this can go a little bit higher, and naturally, this can come and get a little bit more deflated. And we'll know how to trade this call. Another one that we like is the 620 call, which we had sold up at the high here with Bill Merritt right here on the high of that wick. Look at what the high was over here, 22.80. We sold these right here with some MMTs. We sold them right up here at the highs, right up in here. And now the value is down here at $7. Can they go a little bit lower? Absolutely. Now, that's a 620 call that we're going to be monitoring at where the levels come into. And we had sold these up at the high. If the thing about it is they can still come a little bit lower on a drop down, but we're getting more back to the deflated area. Look at the great run they like to have when they're deflated. $3.90 all the way up here to the highs of $22.80. So there's, but now, yeah, we are fairly wholesale. We will be looking at entries and possibilities on the 620 call up and out of the money. Once again, the 650 call, which we'll be looking at, that's this one right here on a weekly chart. And the 650 call, it's the very same call that we sold at $5.90 and took our profits. What I would like to point out to MMTs is now that very same call is at $1.65. And how smart we are, because we sold at the highs and we're starting to buy back a little bit in this deflated area at $1.70. The low is $1.65 and the high was $6.20 and we sold at $5.90. Once again, we're still looking at how that Google trend, the daily stock trend, will set up with all of our call and put strategies starting right here at 1217 from the 580 puts all the way up. I will do Marches at a later date. So basically, it's the imbalances and how we trade that weekly one that we did and how we trade this new monthly one using call and put strategies on Google.